You ever get that feeling where you finally save up some money, maybe a few $1,000, and you're just sitting there like, okay, now what? You've read about crypto, you've seen the meme stock drama on Reddit, AI is the next big thing. Everyone's saying, this one's gonna moon, but you're sitting there thinking, what if I don't want to live on a roller coaster? If that's you, I get it. That was me. And this video is exactly what I wish someone had made for me when I was getting started. Let's talk about an ETF called SCHD, a not so flashy, totally underrated dividend beast that might just be the secret weapon in your portfolio. Yeah, I said it. SCHD, no rocket emojis, just real money, stacking slow and steady. Now, I know what some of you are thinking, but what about growth? What about those 100% gains? Here's the thing, SCHD isn't just about dividends. Over the past decade, this fund has delivered solid capital appreciation too. You're getting the best of both worlds, regular income and long-term growth. The fund is rules-based, which means there's no fund manager making emotional decisions. They only pick companies that have paid dividends for at least 10 years, have strong fundamentals, and trade with high volume. It's like having a strict bouncer at the club. Only the highest quality companies get in. And speaking of quality, let's talk about what's actually in this fund. The top holdings include companies like Lockheed Martin, yeah, the defense contractor that's not going anywhere, Cisco, the company that basically built the internet infrastructure we all rely on, Verizon, because we're all going to keep paying our phone bills no matter what happens to the economy. These companies are not going to double overnight, but they're the kind of companies that keep making money whether the market is up, down, or sideways. And in uncertain times, that reliability is incredibly valuable. One thing I love about SCHD is the built-in diversification. The fund cap sector exposure at 25%, so you're not putting all your eggs in one basket. You get exposure to energy, consumer staples, healthcare, industrials, financials, technology, consumer discretionary communication, materials, and utilities. It's like buying a slice of the entire stable dividend-paying economy. But here's what really sold me on this approach. During the market volatility we've seen over the past few years, COVID, inflation fears, geopolitical tensions, SCHD held up remarkably well. While growth stocks were getting hammered, this fund kept paying dividends and maintaining relatively stable value. And that's the psychological game changer. Instead of staring at red numbers and panic selling, I'm collecting dividend payments every quarter. Even when the market is down, I'm still making money. That changes how you think about investing entirely. In the age of meme stocks, moonshot tech plays, and crypto quick wins, it feels strange to get excited about Coca-Cola, or Verizon, or Lockheed Martin. But here's the truth nobody wants to admit. The real flex isn't trying to 10x your money overnight. It's building wealth in peace without all the chaos and second guessing. That's what a lot of younger investors, especially people chasing FIRE or financial independence, retire early, are starting to figure out. Instead of spending every day trying to beat the market, they are building systems, passive income, portfolios that pay them back. And at the center of a lot of these systems, you'll find dividend ETFs, specifically SCHD. Now, let's be honest, SCHD is not flashy, it's not exciting at first glance. It's like the Toyota Camry of ETFs, quiet, dependable, and keeps running, no matter what the market throws at it. But under the hood, this thing's a tank. 4% dividend yield, 10 plus years of dividend consistency required for inclusion, focus on companies with strong fundamentals, and high return on equity, 0.06% expense ratio, basically free. And the companies inside SCHD are not companies chasing headlines. They're paying investors consistently every quarter. Now, if you're into FIRE, or even if you're just tired of watching your portfolio bounce around like a toddler on a sugar rush, here's why this style of investing is so powerful. Dividend investing, especially through something like SCHD, checks every FIRE box. Compounding, every dividend reinvested is like planting another money tree. They start small, but give them time. Lower volatility, less drama, fewer stress snacks, inflation protection. Many of these companies increase their dividends over time, so your income stream isn't standing still. Diversification, you're getting a blend of healthcare, staples, energy, industrials without having to pick individual winners. Automation, SCHD does all the screening, sector capping, and rebalancing for you. Honestly, it's the set it and don't freak out approach. And sometimes That's exactly what you need to stay in the game. Look, I'm not anti-growth. I've got exposure to other stuff too, but when you've got 24/7 coverage of Nvidia earnings, Fed announcements, and some token with a Shiba Inu logo pumping 300% overnight, sometimes you just want one thing in your portfolio that doesn't give you an ulcer. And SCHD is that for me. It doesn't make the front page of Reddit, it doesn't get its own laser eyes on Twitter, but every 3 months it drops a check in my account. No questions asked, no drama, just business. And if you're building toward early retirement or even just financial peace of mind, those quiet, boring checks matter. So right now, I own 319 shares of SCHD. My average cost is around $27, and I've invested a little over $8,700 so far. I've been buying consistently monthly contributions, reinvesting dividends, dollar cost averaging the whole way, and SCHD has paid me about $100 in dividends, which, if you think about it, is almost like SCHD covering part of my groceries, or just stacking back into more shares. And the best part? Those dividends will keep growing. Slowly but surely, like compound interest with a paycheck. I'm not flipping stocks here, I'm building a machine. Every month I invest. Rain or shine, red day or green day. I don't try to time the market, I just keep stacking shares. When dividends hit, I reinvest them. That's it, rinse and repeat. And over time, what starts as a few bucks becomes hundreds, then thousands. The power of compounding is wild, but only if you give it enough runway. You don't need to catch the next Tesla. You don't need to beat Wall Street. You just need to stay consistent with something that works. And don't try to time your entry into SCHD. The whole point of dividend investing is time in the market, not timing the market. Start with whatever you can afford, even $100 per month, and be consistent. And please don't make the mistake I made early on of thinking you need to choose between growth and dividends. They can work together beautifully. My growth stocks provide the excitement and potential for big gains, while SCHD provides the stability and income that lets me sleep well at night. Listen, I know this isn't what's trending on TikTok. I know some guy with a Lambo and a leased watch is telling you to buy some altcoin that'll 100x by Friday. But let me ask you something. Do you want noise? Or do you want freedom? Because SCHD isn't exciting, but freedom is exciting. Being able to walk away from a job when it no longer serves you. Being able to travel, explore, spend time with family, or just breathe without money stress looming over you. That's what I'm building here, one dividend at a time. If you're new to investing, confused, or just tired of the chaos, you're not alone. I was exactly where you are, and I'm still learning every day. But if this video helped clarify anything for you, or if you're thinking about getting started with SCHD, drop a comment. Let me know where you're at on your investing journey. Whether you've got 1 share or 100, we all start somewhere. And if you've already been investing in SCHD, I'd love to hear how you're using it. Are you reinvesting the dividends? Are you using it as part of your FIRE plan? Because the truth is, this whole game, it's not about beating the market. It's about buying your time back, and that is the biggest flex of all.